when it returns, when all these dollars returns, 71% of the world's currency is US dollar. When it returns to the banking system of the US, they will have many problems internally, and who knows what's going to happen. Obviously, the long-term plan is not to own dollars as an investment.
Rethinking the Dollar. Today I'm excited to have my guest, Mr. Lior Gantz. He's the founder and editor of Wealth Research Group. Today he's going to join us to share his thoughts on the dollar as well as the global economy. So Lior, welcome to Rethinking the Dollar.
Hey, thanks for being.
I appreciate you taking time to sit down with me. Looking forward to getting your thoughts on a variety of things. But before we dive into that, can you give those that may not know who you are and your work, give them a little bit of a better understanding of who you are and what type of work you offer?
Sure. Well, basically, I started investing at the age of 16. I'm 32 now. When I got started in the stock market, it was the year 2000. So it was right when the dot-com bubble burst. It was a great time to begin investing because everything was becoming very, very cheap and undervalued. And so basically, I started researching a lot of the philosophies, and from that day on, I started investing personally, and I built a real estate business in the U.S. And through contacts and various relationships in 2008, I started managing money for high-end clients. 2 years ago, in 2015, what would be my partners today and I have decided to launch Wealth Research Group at the early stage of 2016, noticing that the gold and silver market, especially the stocks, were so deeply undervalued, and we wanted to get more information and fortify the financial education and the financial fortress of everyday people. And so we started a free newsletter, and in 2016 was the highest ranked free newsletter in the world. Hopefully we can continue that streak in 2017. So that's basically where I'm at. I kind of wear four hats. For one, I'm a big proponent of Warren Buffett's type investing. We can get to that. I also built a great real estate business between 2009 2013 when the market was really, really cheap in the United States. And my third hat is that I'm a big proponent of speculating in the gold and silver market, other commodities as well, and the marijuana legalization right now. But also, and that's more maybe to your audience, I believe that there will be a huge problem facing everyone, not just investors, but just savers and everyday people, with how the system that we currently live on will transfer. I'm talking about the fiat monetary system, of course.
Right. Now, before we dive any further, I typically start off with Rethinking the Dollar with a few questions. And the first question is, what comes to mind when Lior Gantz hears the words Rethinking the Dollar?
Well, see, the U.S. dollar is so different today than what it originally was when the Republic of the United States started. But I'm talking 1913 and onwards. Once the Federal Reserve was established, it went through a few cycles. You had the 1913 to 1922 cycle, 1922 to 1929, and what they did. When I'm talking about these cycles, is that they basically changed the exchange ratio to gold. So 1929, you had this major stock market crash. In 1933, they made lots of changes to the dollar back then. The huge change to the dollar came when it was pegged to $35 pegged to 1 ounce of gold in the Bretton Woods Agreement in 1944, and then when the U.S. could not stand that ratio anymore because the federal government spent too much in Vietnam and Korea wars, then the world was becoming aware of this. They wanted an audit of the gold reserves, and Nixon, instead of getting it audited because he knew it wouldn't pass the test, he defaulted on the Bretton Woods Agreement, and we've been living on this fiat monetary system ever since. So 46 years later, it created a credit system. And this was not the original intent of the dollar or the founding fathers, etc. And it's not the original intent of any government, I guess. Initially, it's not a sound monetary system that we live on today. It doesn't disrupt the fact that many people get rich and become millionaires every day, and people lose everything every day. It's the same as in anything else. But the difference is that the measuring stick, the currency that you save up in, has only fiat value and not intrinsic value. That's the major thing. And this obviously this will not go on forever. It may go on for a decade longer. It doesn't have to end today. It's been going on for 46 years. But the environment is definitely different today than it was back then, with the national debt of the U.S. exceeding 20 trillion, and basically Donald Trump just announcing that he's going to do a tax reform, which means that on the flip side, you need to raise the national debt again. So the only reason that the dollar is sustaining this long is because the other countries that are holding it are not dumping it, obviously, because that will deter them as well. So it will be either a very systematic and a beautiful deleveraging of the system somehow with the help of all the governments that own much of the foreign debt, or it will be a huge catastrophe, a panic out of this. But obviously, everyone at this point knows that everyone at the policymakers level know that the system is unsustainable, and they're trying to figure out how to unwind this.
Right. Now, early on, you hinted at, a part of what you do at the Wealth Research Group is to look to educate your subscribers with the free newsletter. And so why right now, in your opinion, if it is, do you think that this subject matter of understanding monetary literacy or monetary awareness is the single most important subject a person can really grab a hold of in this period in time?
Well, it's because becoming rich is the most important thing you can do in life. And I don't say that for the material side of it. Having riches does everything for you. Obviously, except for your personal health and making sure that you breathe and eat and sleep in a good way. Having money gives you options, and having money gives you a lot of options. It gives you the options of choosing choosing your place of if you have your own business, choose your place of business, the people you work with, where you live. It gives you options to give to others, the people you love. It gives you the option to create a fortress around yourself and your family. And for me, coming off a background of a family of a father who had 2 bankruptcies and in my teens, and a third one when I was like 23, money gives you stability, and you don't have to go through a roller coaster life, basically, that many people will. Now, if you are if you have market literacy, if you have financial literacy, less things surprise you, which is what I really like about becoming more savvy about everything that has to do with money. Lastly, I think, look, this is not 300-400 years ago where people were farmers, right? People change vocations 4 to 6 times during their lifetime. Things change so rapidly, and if you don't have the basics, which is the financial literacy of how everything works, then you start at such a you started at an inferior position.
Right. Good explanation there. Now, we are at the beginning of May now, and so there's a lot of things going on from everything happening in Europe. We have, as you mentioned earlier, the debt ceiling here. This is the issue here. So it's the beginning of May now. What are some things that concern you? What are some things that you're really keeping an eye on that might be the catalyst for this economic shift or monetary reset or whatever a lot of people like to say? What are you keeping your eyes on these days?
Well, look, because things are not as they used to be with regards to the way that politics has to do with money. It used to be that politics had nothing to do or very little to do with economic activity. But since currencies are being issued by governments, the fact is a currency such as the euro, such as the dollar, such as the yen, the pound, it doesn't matter. If the country that issues it has problems, it creates a lack of loyalty and a lack of confidence in that currency. And therefore, for instance, if Europe has a refugee problem right now and they have an elections where Marine Le Pen can win in France and it will be the populist vote winning, it can have an effect on the euro. France can actually exit the euro, which will cause more problems for that currency. So, yeah, what you're saying is a problem in Europe. I think they'll get over it eventually. In a more, it won't cause war, it won't cause conflict. But the biggest issue right now in Europe is the populist uprising, which is understandable because the youth in Europe has a far higher unemployment rate than in the U.S. I mean, about 50% of the youth, 20 to 25-year-olds in Europe, are struggling to get by. There's about 25% unemployment rate in Spain and Italy. So, look, there's many problems. The thing about investing is you got to realize companies, businesses, people, they find ways to overcome all problems. In the 20th century, we had 2 world wars, we had flus, we had epidemics, we had oil shocks, we had, what did we have? And yet, investing in stocks has compounded at 8% a year. That means doubling your money in about every 6 to 7 years. So over a lifetime, becoming an investor is absolutely the best thing you can do. Sure, there are problems. There are many problems, but the overwhelming fact is that the free enterprise system works. It is disrupted. It is problematic, especially in these times where central banks are intervening in the free market. But and that's why you see a lot of the assets underperforming. So it's true. But what's the choice, right? Having a financial literacy is the only option you have. Right. What worries me basically is what's going to happen with the U.S. debt ceiling. Kicking the can down the road again and again will create a problem for foreign currency holders. They will look to exit their huge positions. They're already doing something that not a lot of people are talking about. But listen, for instance, the Chinese are not buying 30-year bonds anymore. They're buying 5-year bonds or 2-year bonds, which basically is like the bank telling you, look, I'll loan you money, but for 5 years or 2 years, I won't loan you money for 30 years. I'm not trusting your abilities to. So there is a currency war, and that's the main reason why you don't want to just have a huge cash allocation. Cash is liquid and it will give you lots of options for bargain seeking. But obviously, just saying, look, I don't know anything about investments, I'll just put everything in cash. Well, remind yourself that cash is credit, and it can, well, in a face of crisis, it can really evaporate.
Right. I want to talk a little bit about debt. Just a minute ago, you mentioned that central banks are intervening into the markets now. So we have in Europe, especially, QE is still underway. And so if there's a recession or when it's officially announced here, a lot of people suspect there's going to be a new form of QE, 4 or 5 or whatever may come. And so by all this, basically cheap money / monopoly money being created, won't that really hurt people who invest in markets and people who don't have a complete financial understanding and monetary understanding? If they just start printing it to the masses, the Dow going to go through the roof, as well as all these other markets. And so how will that really impact, the paper that you're holding on still?
Well, listen, it's important to realize the distinction between value and price. For example, during the 2007-2009 financial collapse, if you take a company like McDonald's, for instance, they were profitable in 2007. They were more profitable in 2008, and they were more profitable than in 2009. So every year, that Great Recession, they made more money than the previous year. Johnson & Johnson did the same. I'm just giving you these two companies as an example. Right. But the idea is they were making more money, and their stocks were cheaper. So you can buy a better company at a cheaper price. The idea is to find value, not to look at the price. And that is basically what investing in the stock market is about. So a price tag is relevant, but it's relevant only when you compare to the underlying value. If you can find value, it doesn't matter if there's going to be higher inflation, 3%, 4%, 5%, etc. the idea is to find value, and there are undervalued stocks all the time, everywhere. Now, during times of higher inflation, you have a different type of stock that flourishes. So either a company that can raise their product or service at a faster rate than inflation rises. Basically, a product that if you raise the price 5%, it won't deter clients from buying it. So if you have that kind of brand recognition, say diapers, cigarettes, etc., people are not going to stop buying because it's 5% higher. You need that medicine. You will stop buying, luxury stuff if they raise it by 5-10%. You won't buy, for instance, jewelry. If they raise it another 10%, you can't afford it. So lots of industries are recession-proof. On the flip side, if you look at commodities, when inflation rises, commodities tend to do very, very well. Some commodities more than others, but looking at if you're asking me basically about gold stocks or silver stocks, the idea is simple. Forget everything you heard. Forget all the nonsense about an inflation hedge, a deflation hedge, a chaos hedge, whatever. Gold rises when negative yields are in place, or when negative yields are or when yields are in decline. So if the trajectory is down or negative, gold and silver rise. But it's not only that. You need a time when the S&P 500 and the general indices are also downtrending. So basically, right now you have this. Think of it like a good stew, a great meal on low fire, and that low fire is negative yields. But that fire can become much stronger if the S&P 500 starts declining. When that happens, gold and silver stocks will break from their 6-year downtrend that they've been in. And the moves can be quite large. I mean, some companies we cover on Wealth Research Group. And by the way, for your listeners, we created a watch list. I don't know if you know, if your listeners know what that is, but basically when you invest, what you want to do is you want to shop around before you buy companies. So you want to do all of your research, all your due diligence, find the perfect entry price, and just have them on a watch list. So when they come to you, when the opportunities come to you, you can know exactly where you want to go. So we created an entire watch list for your subscribers and for your listeners at wealthresearchgroup.com/watch list. And you can look at what quality companies look like, and then you can see exactly how disciplined you must be to buy them cheaply, because right now the trend is just not there. So what you're doing basically is accumulating before the move up. So your dollar cost averaging, it's called. On the flip side, for many people, the gold and silver stocks are absolutely a nightmare. They can't stand them because they can move 30% down in a day for no reason. So our strategy basically is to follow only the best people, only the most proven, the serially successful, buy their stocks in dollar cost average. And on the flip side, you got to hedge your position. So you short the basket of losers, and therefore you make money when gold stocks go down, and you get to buy your shares much cheaper.
All right. Okay, so let me ask you a question. So let's talk a little bit, because you mentioned about just the overall financial market as far as stocks and things like that. But how about physical precious metal, like the value to price aspect of it, being that the ratio of gold to silver is 70-1. So silver is heavily underappreciated. Share what your thoughts. Share what your thoughts with me on the physical possession of actually having the metal in your hand directly, outside of these stocks.
Sure. First of all, it's important to understand that these are not stocks. When you invest in the physical bullion, either the gold or the silver, you're buying a piece of metal. And that piece of metal does not change. If you look at it 10 years in the future, it will not grow and it will not shrink. It will still be there. So the idea is that gold and silver bullion is a form of currency. It's an alternative currency that does much better when yields are negative or close to negative, which I suspect it will be for 3 or 4 years going forward, at least 3 or 4 years going forward. But it's important to remember, when it's not the case, then their price compared to other currencies will go down. But what you're buying is insurance. So when other currencies erode by the powers of inflation, because the system is inherently inflated, this fiat monetary system, what you're buying is insurance. You're buying the preservation of purchasing power. Now, I don't suggest you just buy it and put it in your home. You can find many locations within your country, but you can find offshore locations as well. For instance, I have gold stored in Canada, in the United States, in Switzerland, in Hong Kong, and in another country in South America. So I have political diversification as well in case something happens. I also own cash outside the banking system. So actually, like a stash of cash, like a 12-month living expenses that I keep outside, and just in case. It's like your emergency fund, you can call it. So but it's not a major part of my portfolio. If something happens, if something major happens, it's not going to happen overnight. You're going to have time to prepare. And I love many people that say, look, when it really comes down to it, you won't find gold, you won't find silver. It's not going to be there. Every ounce of gold that has ever been dug out of the ground is with us. It's not industrialized like silver. So silver, if a crisis happens, will be the much more fascinating metal for two reasons. One, like you said, the historical ratio of 16 to 1 that was set throughout the Middle Ages and way before the Middle Ages, even in the Romans and the Greek times, is not there anymore. The reason is silver is not monetized by governments anymore. They don't own silver. They dumped all their silver in 1971 until the year 2000. It took them like 30 years to dump all their silver reserves. So silver is right now in the open market. Now the fact is it has more than 1,000 industrial uses. So its price is affected by industrial demand as well as investment demand. But the beauty about it is it's not there, right? It's not like gold. It's being consumed and you can't recycle it. Most of it you can't recycle, etc. So if a crisis happens, let's say right now, first of all, people will turn to gold. The price will go up, but then people will look for a cheaper form of gold, right? Mm-hmm. That's where they'll find problems owning silver, and that's why the price of silver can really be much higher once it changes its definition from industrial to monetary. So when that happens, the price can be much higher. Just think of Bitcoin, right?
Right. That was gonna be my next question about Bitcoin, all of the altcoins going on right now.
Yeah, well, let me compare that for you for a second. Bitcoin, when it was just an idea between you and I, it had no value. But now that millions of people perceive it as money, look at its value. So it's perception, right? If people perceive that this is money, it will be trading for 1,000. Who knows? Look, if silver was money again, who knows the price of silver, right?
Right. Especially if it's hard to find. I mean, how much would you be willing to get rid of your silver for? How much would you be willing to extract an ounce for if there was a total collapse or some type of hiccup in our monetary system is the question. So yeah. Interesting there. So let's touch a little bit on cryptocurrencies. I mean, so a lot of people look at it now as an alternative form of currency, as well as just they call it money now, digital money. And so do you think that the whole idea of cryptocurrency is by design implemented at this point in time in history, or was it something that was already in the works by the powers that be to prepare us for a digital economy down the line? Or share with me your thoughts on cryptocurrency in general.
Well, the thing about cryptocurrencies, first of all, is that they're not being manipulated and rigged in the financial markets. So, a lot of people that buy gold are very upset because gold contracts are leveraged about 250 to 1. And so the price is not really moving in a very in a stable manner. The London and New York exchanges are very leveraged as compared to the Shanghai exchange. So it's outside the system, but honestly, it is somewhat inside the system. Cryptocurrencies are absolutely outside the system. That's the lure of them. The privacy is another thing that's important about them. And it's a medium of exchange. It's a medium of exchange. Obviously, it doesn't have value, intrinsic value. They're finite, right? That's what they say. But if
Right.
if I open another Bitcoin today and you open another Bitcoin tomorrow, and everyone in the world opens their own Bitcoin, they're not finite, right? They're
Right.
infinite. You can open 3 or 4 of them. So the idea is it's a perception idea. If the perception is positive, then you see what happens with Bitcoins, Dash, Stimit, whatever companies that it's like it's a marketing game. If you can market the cryptocurrencies, it will go up. I first heard of Bitcoin when it was $3. So you know what I mean? It's all a matter of when you hear about this before it becomes popular, because obviously as the demand grows, the price exceeds. So Bitcoin has exceeded $20 billion the market cap. I mean, it's larger than many companies. But it ebbs and flows with demand. So right now there's a lot of there's a flight to safety. People want to get their money out of one country to another country. It's the best way to do it, right? You don't have to carry it. It's digital. You can move it, and that's it. Your money's outside of your own country. So it offers a lot of value, and therefore the price goes up.
Right,
if you're looking to speculate it, it's another matter. If you're looking to use it, it's another matter, obviously.
Right. Good point there. Now let's talk a little bit about the Federal Reserve note. This show is called Rethinking the Dollar. So my goal is to basically just play out different types of scenarios of how the Federal Reserve note can ultimately return to its intrinsic value of 0. So just let's play through a couple scenarios. Say with our national debt, there's only 3 ways it can be paid back: default, inflated away, or just outright, just try to just ignore it, but it's not going to go away. Share with me your thoughts on how the Federal Reserve note will be received 2, 3, 4, maybe 5 years from now. Will it still be the world reserve's currency, or will that whole shift out east really, derail our plans of trying to keep hold of a reserve currency status?
What's important to realize about the dollar is it's part of a system. It's part of a global system that measures the dollar as the reserve currency of the world, right? So that status, reserve currency, is all that's given it high value. Because if you were looking at another nation, like you look at the U.S. and say, okay, this nation has $20 trillion in debt, or you know what I mean? Look at other metrics.
Yeah.
This nation has a GDP of such and such. If you're looking at another nation which didn't have the reserve currency and the ability to print more, that country, if it was a company, it would be bankrupt, right?
Right.
So as long as the dollar is the reserve currency, it will be around. Now, once the countries that are now of younger demographics and are getting rich, China, India, Russia is not young, but it's definitely getting richer. And when oil prices rise again, it will get far richer. When these countries will want to opt out of this dollar reserve system. Why would they allow the dollar to be the reserve currency when they're far richer and have much more people? Look, the U.S. only has 5% of the world's population.
Right.
I mean, honestly. So it is the superpower in terms of financial assets, and the market economy is obviously the best. It's one of the best places to do business. With all the troubles that it is in, it was voted by practically every CEO on the planet as the best place to do business, except for China. Go figure. But anyways, the idea is that it will have value as long as it's the reserve currency, and it will start fading out its value once it's not. The real problem, in my opinion, is once it's not the reserve currency, all of these countries need to liquidate their dollar assets, and they will need to return into the U.S. Territory.
Right.
So you got to realize what the U.S. does is it exports dollars and imports tangible assets.
Right.
So it's the greatest scheme ever. You print something, you export it, and you get oil back, you get products back, you get whatever you want back.
Right.
It's not sustainable. When it returns, when all these dollars returns, 71% of the world's currency is U.S. dollar. When it returns to the banking system of the U.S., they will have many problems internally, and who knows what's going to happen. Obviously, the long-term plan is not to own dollars as an investment. It's just not what you don't want to do is get into debt right now. So many people think, look, I'll get into debt and then inflation will erode it. I'm going to be rich. So I'm going to buy all these assets. And then when the bank comes, I'm going to just tell them, look, here are your dollars, right? It's not going to work that way. And, snap out of it. Build a sound financial allocation around yourself. And here's what you need to do, right? You need to diversify. You need to make sure that you stick to what works and forget all the nonsense. What works is to have a good sizable position in these chaos hedges like gold and silver bullion, cryptocurrencies, other offshore real estate. But the majority of your money has to be in cash producing assets. And even that is secondary. That is a 30-year plan or a 40-year plan. Don't think your investments will make you rich in 5 to 10 years, unless you're catching a violent bull market in gold and silver stocks or in the marijuana legalization process. Stocks go up at 8% a year yield. If you're very good, 9%, 10%, 11%. Still, your main income and your most important thought is, how do you bring value to the market? How do you get your main source of income, your career, to the next level? So that's very important for people to understand. I know people listen a lot to financial shows and investment shows, but by far, anything we say here is secondary to how you build your own career or your own business or businesses.
All right. Well, Lior Gantz, I appreciate you for sitting down with me on Rethinking the Dollar. Before we let you go, can you inform the audience as to more of the things and where they can find you and how they can stay in tune with what you have going on?
Sure. First of all, the website is wealthresearchgroup.com. When you enter the website, on the top menu, you'll find 2 buttons that are of interest to you. One is called Special Reports, and that's where all of our top and highest conviction exclusive reports are there, and you can download them for free. To the left of that button, it's another button called Wealth Stocks, and that's where you'll find our Buffett style companies that are for long-term compounding. We didn't go into compounding, but it's the most important idea in finance. If you want to learn more about Bitcoin and other cryptocurrencies, you can reach the exclusive report we have on wealthresearchgroup.com/Bitcoin. And if you want my personal way and strategy of how to evaluate gold and silver companies, you should go to wealthresearchgroup.com/gold playbook. I'd appreciate if you just put the links, obviously, down for people who can't.
I will do that. I will do that. Yes, no problem.
Sure thing.
Well, Lior, thank you for sitting down. Looking forward to continue to follow your work, and definitely I'll get more in tune with some of those things, the resources you offer. Other than that, enjoy your day, and look forward to hopefully connecting again down the line as things unfold, and we'll see kind of what's going on in this world.
Thank you, sir. Thank you for having me.
My pleasure.